Hi, everyone. My name is Pat Collins. I'm a partner and CEO of Greenspring Advisors. I'm joined today by Greg Hobson. He's also a partner and a practice lead on our institutional team. We're both members of the investment committee, and we thought it would be a good time for us to just give you a quick background on what's happening and lend some perspective to the markets and what we're seeing out there today. So first off, just a quick introduction. Obviously, I think everybody knows that the market's been a little bit challenging this year. We've seen a few things happening. One is that we've had much higher inflation than we've seen in decades. So that's something new that the market is digesting. Second, the stock market is down over 20% this year. And those types of returns are based on both inflation, but also the expectation maybe there could be a slowdown in the future. And then finally, one of the things we're seeing is rising interest rates. At the beginning of the year, the 10-year Treasury bond was yielding about 1.5%. It's now about 3.25%, so it's risen almost double from where it started. So all these things the market's digesting. And so what we thought we'd do is try to take a little bit of a step back and lend some perspective. So on the screen, what you're looking at is the world stock market since 1970. And I have Greg Hobson joining me here, and Greg started his career in 1994, so 28 years ago. And what you'll see on the screen is we've been through a lot over those years. Obviously, there's been a lot of the things that we probably all remember, big recessions, but there's also some things that maybe you don't remember. So I want to stop and just ask Greg a question. When we think about all the things that we've been through, is there anything in your career that sticks out when you look at this chart?
Well, Pat, I think what I think about in times like this is that we've been through it before, right? The downturns are not necessarily ever the same, but they're all similar. And what I mean by that is that the talking heads are always trying to predict the market continuing the downward trend, or we've hit the bottom, or this is the time to invest because we have hit that bottom. And really, no one knows for sure. Specifically, I remember listening to one pundit in early 2008 before the collapse of Lehman and so forth. And that person had said on CNBC or Bloomberg Radio, I can't remember which one it was, that the housing market downturn only represented a small portion of the economy, and it wouldn't cause any major ripples in the stock market, which obviously was very wrong, where we saw a 50% decline in the S&P 500. And another example was in 2011, when another famous market forecaster predicted that the Dow Jones Industrial Average would have a tough 2012 and eventually crashed to 3,000 in 2013. The Dow at the end of 2013 closed at over 16,000. So a little bit off from that perspective.
Those are great points. I think, when we look at history, one of the things that history is riddled with is predictions. And, sometimes they're right, but often they're wrong. And so those are great points. And I think we all remember predictions that have worked out terribly wrong over the years. So great point. So just to follow up on that, obviously, we're some of the things I mentioned in the very beginning about what we're seeing in the markets. Do you see any similarities with today's markets and maybe things that you've been through in the past in your career?
Well, I would definitely say that, sort of what we've seen very recently is a few things. So number one, valuation and exuberance. I mean, all the talk about how today's drop in tech stocks, crypto, ARK investments are similar to what happened during, the end of 99, beginning of 2000, and similarly, and maybe perhaps that crypto and blockchain, it is similar to the internet, meaning that they're probably going to have a long-term need in society, but the investment case didn't work out quite so well at that moment in time, and it took time to work its way through. Number two, potential recession. We've been through several recessions, obviously the most recently with the beginning of COVID, which is similar to what we're starting to hear in the media today, that that a recession is almost inevitable from a lot of pundits. 1997, Russia defaulted on their debt. So the Russian crisis that we had back in 1997, that's a possibility that maybe that happens again today, based on some of the news that we hear coming out of Russia from a financial perspective. And the last one, though, is maybe one that many of us haven't really dealt with, which is inflation. And we really haven't seen that in the last 30 years or so. But, when you do look at that chart, we have had, bouts of rising inflation and interest rates over the years. I mean, inflation hit 13.5% in the early 80s, and we're not quite there yet. And hopefully we don't get there. But those are the things that are, similar to what, we've seen over time. The inflation one is the one that we probably haven't seen very recently, though.
So again, kind of looking at this chart and thinking about your career, your 28 years in the business, we can see how many crises we've been through. And, as I looked at this, it brought back memories of things that I kind of forgotten about, Y2K and, the Eurozone debt crisis, which wasn't that long ago, and Brexit just a few years ago. So we tend to have a lot of these news of the days that can move the market. But all the while, when we look at this chart, you can see that investors that are patient make money. And so, when we look at your career, I know it's not listed on this chart, but $1 invested in the world stock market in 1994 is worth over 10 today. So you have 10 times your money if you just were disciplined through that process. So what are some of the main lessons you think we can learn from history and apply it to today when we're thinking about the markets?
So I'd say a few things. Number one is, you already mentioned it, Pat, and that's patience. I can pick out any given period of time and show how great or terrible the market was. But as you already alluded to, long-term investors are rewarded, for assuming the risk of stocks and equities. And that's, been consistently the story over the US and the international markets. Number two is discipline. And there are so many times it would have been easy to throw in the towel in the market. Obviously 9/11, the near collapse of our financial system in 2008. And then most recently, the COVID, beginning of COVID in March of 2000. There's really scary times. Obviously, we have some very difficult situations to deal with now, whether it's the war in Ukraine and what's going to happen with Russia, or inflation here in the US and how that affects the pocketbooks of every American. But it takes discipline not to sell good investments at bad times. The only investors who lost money during prior markets are the one who sold since the market was always going to go on to higher returns from every other time we've seen. And the last one is, don't put all your eggs in one basket. And people say that a lot, but really, what does that mean? And, when we're looking at the chart of the overall market, while we see some rough times, you can see the chart generally goes up. What we don't see is the individual components of the market. Investing in single stocks can lead to permanent loss of capital or, greater risk. So just ask the owners of Lehman or Enron. And there are other cases, but those are ones that stick out. But I actually think about a bigger picture, not just the really dramatic events of Lehman or Enron, but when you look at individual stocks over the last 3 years through the end of May of this year, 40% of individual stocks over that 3-year period have lost money, and only 0.7% of mutual funds and ETFs in the US have lost money. So again, 40% versus 0.7% over the last 3 years through the end of May. So being diversified is incredibly important, and not putting all your eggs in one basket. So, take the risks that off the table that could, potentially financially ruin you is one of those keys of being successful.
Thanks, Craig. It's great perspective. We really appreciate that. And, as we say often, history doesn't always repeat, but it often rhymes. And I think this market is a great reminder of this simple truth. So thanks, everyone, for listening. If you have any questions, we'd encourage you to reach out to your advisor at Greenspring. And we hope you have a great day. Thanks.